Sony's under fire from the president for caving into terrorist threats. In today's cover story, local governments are trying a new approach to keep companies from relocating. And another gold mine in Silicon Valley could be a picture-perfect end to the year for Facebook. Plus, a white Christmas could put a damper on your holiday travel plans this year. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning. It's Monday, December 22nd. I'm Chuck Coppola. Angela Miles has the day off. In today's First Look, Christmas comes early. The holiday festivities may not actually begin until later in the week. The traders kick off this Monday on a high note. Stocks wrapped the session Friday with the biggest weekly gain since October. The Dow rose 27 points, the Nasdaq 17, and the S&P up 10. Gold fell $1, while oil made a surprise move, jumping $2.80. As anxiety kicks in following Sony's cyber attack, Staples says it too has suffered a data breach. The office supply chain says back in September, hackers deployed a complex malware at 115 of its stores, affecting 1.2 million cards. And AbbVie could be a stock to watch today. The drug maker has received approval from the Food and Drug Administration for its hepatitis C treatment. Let's say good morning to Joe Cusick of Trading Block. Thanks for being here.
Hey, thanks, Chuck.
Oil had a big bounce back on Friday. Where is it headed from here?
You know what? It's pretty impressive. Coming off those lows, you saw oil as well as oil-related stocks really bounce last Friday. We're going to see if that continues going into this Christmas holiday. The beneficiary really has been the consumer with these low oil prices. You've seen the price at the pump go from that $4 where we saw earlier this year to down to around $2.70. There's projections that we could actually see gas prices down to $2.40 in January.
Wow, what a Christmas present and late Christmas present that might be. We had a strong rally going into the end of the week. What do you expect for this shortened holiday trading week?
You know, if you look at the S&Ps as, basically a barometer, you're going to look at challenge at 2,100. As we had said, with the consumer now having a little bit more cash in their pockets, you're going to look at consumer discretionaries and those areas where the consumer is going to be spending more money and where those different kind of companies that really are able to take advantage of that, they're going to really make this market a lot more buoyant going into the end of this month and into January.
We're also seeing an awful lot of activity involving small cap stocks. Give us your take on those.
Yeah, well, right now, my take is if small caps and micro caps have been the leader, we saw that as the catalyst into Thursday and Friday of last week. Chuck, right now, if those continue to lead, this market is going to have plenty of upside catalysts that are going to be pushing it. The one caveat is watch volatility. If you start to see that volatility really starts to get up and back into that 21, 22 level, that could be a red flag in spite of the rally in the market.
Absolutely. Good advice. Joe Cusick of Trading Block. Thanks very much.
Thanks, Chuck.
Corporate America is on edge amid fallout from Sony's hacking scandal. Friday, the FBI accused North Korea's government of playing a role in the hack of Sony Pictures. Sony pulled its new movie, The Interview, from theaters following threats of a 9/11-style terrorist attack. The Interview is about the assassination plot of North Korean leader Kim Jong-un. Friday, President Obama called Sony's move to stop the release a mistake.
We cannot have a society in which some dictator someplace can start imposing censorship here in the United States. Because if somebody is able to intimidate folks out of releasing a satirical movie, imagine what they start doing when they see a documentary that they don't like.
Tech analyst Rob Enderle says Sony's internal flaws now have corporations scrambling to increase security.
That may point to the fact that there are a lot of other large companies that are severely undersecured, and that makes them all targets now because this has been a huge example that, that all that security that folks thought big companies had, they really didn't.
Meantime, Hollywood publication The Wrap says Sony's decision to pull The Interview could cost the company $90 million. Shares of Sony fell 2.5% on Friday to $21. Paul Eggers is here with an update on Target's credit breach. Paul?
Good morning, Chuck. A judge is allowing a class action lawsuit for victims of Target's massive hack attack. The Minnesota judge says the claimants suffered injuries that are fairly traceable. At least 40 million Target credit cards were compromised. That resulted in possible theft of personal information for more than 110 million people. A month ago, the Minnesota judge allowed banks to sue for losses due to the breach. Trials in both customer and bank cases could begin in 2016.
Sears is apologizing for canceling layaway contracts just before the holidays. The retailer had canceled thousands of online contracts due to a system error, which indicated many items ordered were out of stock. Sears is investigating the error. Kmart customers were most affected. In some cases, layaway items that were found in inventory had already been shipped. In the interim, Sears is offering to send similar items or issue gift cards to customers.
BlackBerry earnings are back in the black with a small profit recorded in the third quarter. Analysts were expecting a loss from the Canadian smartphone maker, but the firm ended the quarter with just over $3 million in cash, keeping in line with the second quarter. BlackBerry has been transitioning its products and business outlook as it struggles to compete with other smartphone makers like Apple and Samsung. Shares in BlackBerry closed around 3% lower Friday.
Facebook could be sitting on a gold mine. That's according to Citigroup, which estimates Facebook-owned Instagram is now worth $35 billion. Instagram is a photo-sharing app and was purchased by Facebook back in 2012. And back then, Facebook paid a mere $715 million for Instagram. Citigroup says its new estimate is based on fast audience growth. The bank is also raising its price target on Facebook to $91.
Some of Wall Street's most successful investors are getting hit hard by the slide in oil prices. The Wall Street Journal reports the firm of billionaire Carl Icahn has lost $230 million on a stake in a Canadian oil and gas company. Investor John Paulson, who runs hedge fund Paulson & Company, has also reportedly had one of his largest losses of 2014 on an oil bet. Reports say Paulson's firm bet big that oil giants would buy up smaller firms. However, his bet could eventually pay off. Energy analysts expect consolidation in the industry as crude prices drift lower.
As 2014 winds down, the IPO market's looking up, with last year's offering setting records and next year's likely to continue the trend. Renaissance Capital says several popular tech companies are likely to go public next year, including Uber, Spotify, GoDaddy, Pinterest, and Airbnb, as well as other well-known names such as Ferrari, Univision, and Clear Channel. But last year's top-performing IPO was an unknown, Auspex Pharmaceuticals, up 300% since its February offering.
1 out of every 4 IPOs has been from the biotech sector. These are companies that are difficult to analyze, and many of them are coming to market without much, if any, revenue and none with earnings. And I think that there is where we're going to have some concern about whether we could see a replay of the dot-com period.
The consumer sector is another to watch, with fast casual food chains Shake Shack and Smashburger likely to go public in 2015, plus natural pet food maker Blue Buffalo.
Today's globalized economy means that business decisions on relocation and expansion could lead to neighboring cities and towns fighting it out against one another for those new jobs and development dollars. In today's cover story, we profile a new approach that stresses local cooperation against global competition to bring economic benefits to a region. Neighboring cities and towns working against, not with, one another is not a new concept.
That local conflict and competition, fighting each other for small gains, rather than realizing you need to be collaborating to compete on a much bigger scale. And I think it was Ben Franklin who said at the Continental Congress, but it's true of major metros, we must all hang together, or we will assuredly all hang separately.
Learning that lesson from revolutionary times can still be somewhat revolutionary for today's political leaders, where local governments often undercut one another to attract a new business development.
The issue with competition is one that we're trying to, I think, really get away from. You know, it doesn't help anybody out when a business is saying, I want you to compete against a guy 20 miles down the road. That's not really helping anybody out because the workers are coming from the same pool.
The Alliance for Regional Development works to benefit a broad community along Lake Michigan from Milwaukee to Indiana. The agency stresses cooperation over competition.
There are projects that we can work on across state lines that will actually help grow the regional economy and be a win-win for 2, 3+ states working together.
The Alliance counts the first detailed map of the region's transportation infrastructure among its successes, and their approach bringing local stakeholders together could serve as a guide to growth for more regions across the nation.
The rest of the world has really caught on that regional economic development makes sense. People here in the United States haven't bought into it as much, but here we are. This region is leading the way nationally, and we're actually being positioned as a national model, a pilot for other regions in the United States.
Creating a clear transportation and logistics strategy can be key for a region's economic well-being.
The employment picture improves as the jobless rate drops across the nation. The Labor Department reports that in November, unemployment fell in 41 states. In just 3 states, it rose and was unchanged in 6 states. It's encouraging data, especially following last month's blowout employment data. The Labor Department said 321,000 jobs were added to payrolls last month. On the economic calendar for today, watch for existing home sales numbers for November. And on the earnings calendar, it's Piedmont Natural Gas. Still to come, why traders are bracing for a volatile week in the stock market. Plus, holiday headache, why storms are threatening significant travel delays this week. Will the bullish run in the stock market spill over into 2015? Bill Mahler joins us after the break.
It has clearly been a banner year for investors, but if you missed this surging rebound of the stock market, don't just make the assumption that stocks are overpriced and just keep sitting on the sidelines, because 2015 could be your banner year. Bill Ulivari, he runs Untitled Capital Management. And let me ask you, in a nutshell, a lot of analysts I've been talking to do think that 2015 is going to continue the bull run. What is your assessment?
I agree wholeheartedly, Bill. We have the earnings yield on the S&P 500 is still around 5%. We have a 10-year Treasury at 2.21%. And I still think that stock market still has a long way to go. Its dividend yield is 1.79, 1.8%. So in terms of the comparison between equities and bonds, I still think equities make for a much better risk-reward profile than the other instrument that's out there.
Yeah, I think a lot of people overreact. We know that the markets do go down even when it's a strong bull run, and they think, okay, there's evidence that it's weak, or here's another correction coming along. There is a tendency, don't you think, to overreact to negative news?
That's really it in a nutshell. I think people definitely overreact. We always have these sell-offs, we have these stumbles in the market, but we always seem to turn around and make a glorious new high. There was an interesting study that was made recently where if the investor thought that he was buying into a market today, and today was the all-time high, roughly from the peak to the trough back to a brand new peak is roughly 40 months. So we always think that it's nobody wants to be the fool to buy the top. But really, you just need to hold on and be a patient investor, and you're going to be more than amply rewarded if you are attracted to dividend-paying stocks.
Bill, let me ask you about the philosophy that you practice. For your clients, you do what you call begin-again investment. Explain what that is. What do you mean by that, begin again?
Well, beginning again for me means that we're out of the new normal. We have to go back to the original philosophies and attributes that make for a good long-term investor. We buy inexpensive exchange-traded funds and mutual funds. Although I have been attracted to some of these smart beta fund strategies that are out there, but really to make sure that you consolidate your 401ks. Don't leave them laying around at previous employers for 15 years. You know, any cash that you don't need in the next 5 to 10 years should be in the market. You should overweight stocks rather than bonds, just because, you know, in my opinion, the bond market might be that next shoe to fall, the shoe to drop, like we've seen in the grain market, in the gold market, and now in the oil market. So beginning again really means to me to return to the old, time-tested philosophies that make for a successful investor.
That's interesting. You go to the bookstore, you see all those magazines, all those books about how to be a smart investor. It really does break down to very simple practices, and that's what you practice there at Untitled Capital Management. Bill Ulivari, thanks so much.
Thank you.
Coming up, what the president's new stance on Cuba could mean to tourism in that country. And after the break, could a winter storm throw off travel plans for millions of Americans this week? Stay with us.
It could be a bumpy road to get to Christmas dinner. Forecasters are predicting rain from Maine to Florida, as well as snow and ice in the Midwest on Christmas Eve.
There's no question we're going to see travel delays from the Midwest all the way toward the East Coast Tuesday into Christmas Day. Christmas Eve, we're going to have a storm that will provide us soaking rain for the East Coast and plenty of snow and wind behind it across the Midwest.
The storm system could disrupt power in the Northeast just as retailers are trying to ring up sales from last-minute shoppers. 99 million Americans are expected to hit the road or the airport for the holidays.
We're going to vacay in Cuba. That's still a taboo thought in a lot of circles, but some people are thinking of that. Yet the travel industry may not see immediate benefits of normalized relations between the U.S. and the former Soviet satellite anytime soon. Gabe Saglier of TravelZoo joins us. Gabe, how soon?
It's going to be a little while. I mean, we currently have 12 different categories of travelers that are allowed to go to Cuba. This year, we're going to see about 120,000 Americans travel down there. Last year was closer to 75,000. So definitely a bit of an uptick in a lot of cultural, student, government, aid-related travel to Cuba. But this is a hot political button issue. And I think it's going to be a while before the kinds of restrictions are eliminated that would make this the kind of Caribbean destination that we're used to elsewhere. So it's going to be a slow go. Outside the U.S., the push is big. Companies have already started really promoting travel to Cuba before what they call American commercialization takes over the next few years. So there is, outside the U.S., a push over the next year or two. But once restrictions get eased up, you've got first airlines, hotel companies that are going to move in, invest some money on the ground. It could be quite a few years before we actually see unfettered access to Cuba.
How expensive do you think it'll be? Right now, it's between $2,000 to $4,000 to vacation down there. How expensive is it going to remain?
Yeah, I think that if in fact the walls come down and we see much easier access, prices will come down from the price points you just mentioned. Yeah, usually you're looking at about $3,000 to $4,000, maybe even $5,000 if you're looking at airfare, usually out of Miami, and about a week-long stay with some cultural activities to do on the ground and some transportation throughout Cuba. And that's sort of standard. I think we could see anywhere from a 20 to 30% drop in prices as more airlines come in and more hotels open up on the resort front. We're looking at a good 2 to 4 year lag. Some airlines like American, JetBlue already have charter flights out there. It would be rather easy for them to actually open up more flights, and that will bring the price down much more quickly.
Can Cuba handle an influx? I've been reading that the ports there need a lot of infrastructure work. Can they handle cruise ships?
Yeah, if we look at the cruise industry, I think that there's definitely some major work to be done on infrastructure there on the ports. On the ground, several dozen resorts. A company called Melia, it's a European company. They've got at least 25, 26 resorts on the ground. There are resorts that are already catering to Canadians, to Europeans, South Americans coming into Cuba. Aside from the ports, there is that already in some of the more desirable destinations like say, Havana. But I think it will be an influx that'll take at least 2, 3, 4 years plus for it to kind of cater to the pick up and anything to see here in the next few years.
Gabe Saglier of TravelZoo, thanks very much.
Good to see you.
Still to come, a trader is watching the VIX for clues about the stock market. Could a sell-off be in store? Chart Talk is next. For Chart Talk with Joe Keenahan of TD Ameritrade. Good morning, Joe.
Hey, Chuck. How are you today, Chuck?
I'm doing okay. Joe, you're watching the VIX for us today. You're seeing some interesting action. Tell us what's going on.
Well, as we saw last week, particularly from Wednesday to Friday in the sell-off, we saw VIX go from 25 all the way down to near the 17 level. What was really interesting then on Friday was that the VIX was up for a big part of the day with not a lot going on. So as I watch the VIX as we head into this, holiday week, what I'm really going to be looking for is, will the VIX start to spike quickly? As that may be a signal to me that many people are going to start selling equities and buying perhaps fixed income, which is often a play we see in this week, particularly for those money managers who may have had a good year. Sure. Conversely, if we go the other way, you may see them buying equities, so selling the VIX in order to sell bonds.
Sure. So is this the typical year-end wrap-up that we're seeing?
I believe so. You know, we had such a crazy week last week. It was the December expiration cycle. We had quadruple witching on Friday. Is often a very, very crazy one. We threw oil and Fed into the mix just to give everybody some grins. And so now with this, you may see some lower volume. So with that, you could see some quicker moves.
I'm glad you brought up oil because I have to ask you, is oil altering the reality of this year-end action?
Well, I think oil, it's not that it's altered the reality, but it has altered stock prices because oil trading at $56 as compared to $74 has a different effect on many stocks, and they have a different value at that level. So the last few weeks, a lot of it's been about reassessing value of stocks related to oil, and the stocks related had the Fed raised rates, and since they didn't, put them back where they belong without those rates being raised.
All righty, we'll leave it there for now. Thanks very much, Joe Keenahan, TD Ameritrade.
Thank you, Chuck.
Well, that's our show for today. Coming up tomorrow, how the government is taking steps to simplify complicated medical bills that have 43 million Americans in debt. That's on the Tuesday show. From all of us at First Business, thank you for watching.